that we are seeing a hawkish market in the Tech 100 today. So you don't want to do longs in gold if you have already done longs in gold, because we were seeing earlier a bounce in gold. You want to close them out, take in the money, stand down, because fundamentally speaking, we're having a breakout market today in the Tech 100. Let's take this to analysis, check it, and then get back to look at this live chart here. So we are having a bounce out of a level 1. This is correct. But this is an A, B, and the C. Maybe gold will not go down. This is true. But it will break, or at least attack the market bottom again one more time. Let's take it to analysis just to explain more detail. The main focus was on this 45 minutes. It shows the current market progression all the way to do a dot 5 to top out in that high degree 5. This is, of course, 3 in white, 4 in white brackets. We're doing the 5 in white brackets. That 5 in white brackets is done a 1 and a 2, a 3, 4, and a 5. 4 bounced out of a tweezer formation, and so it'll probably end up in an ending diagonal all the way to 3,000. Actual projection turns out to be 3,600. Take it now to a focus between dot 3, dot 4, and dot 5. I'm focused on this dot 3, dot 4, and dot 5. We have a 1 and a 2, we have a 3, we're doing 4. That 4 has done 5 internals. Should bounce a level 1. All right, but it can take its time. It can take all the time it needs in the world to bounce a level 1. When we take this live, if you do not take out a level 3, that level 3, this level 3, we have not reversed. I'm seeing here something like a leading diagonal, and this will roll out into a wedge. So the market will go to 3,380, probably maybe 3,360, fall back to 3,200. Fall back to 3,300. Rise 3,340, fall back to 3,290. Rise 3,330, fall back 3,280. This is the kind of trading you're going to get. All the time, Tech 100 is going to be moving higher. Other traders will still want to probably hedge the longs, maybe in the tech market, maybe elsewhere. Gold, of course, is valuable, so we do not believe it will retract. It will not retract unless you see a very strong rise in the Tech 100 above 21,000. So the Tech 100 is going probably to 20,000. The market will give it leeway to 20,400, 20,600. This is when you begin to see weakness in gold. You see it still retract to 3,240, retract to level 1. If the market breaks 21,000, money is really going to moving. Others will sell gold and move into equities because they will see opportunity. And maybe even at that point, they'll be making a mistake buying the market top. They will take the risk. It is, of course, accounted for. But right now, from current levels, 19,000 to 20,000, I don't believe gold is going to be negatively impacted. But it is not wise to buy and hold. You're just wasting resource. So I perceive the question is, if we have longs, do we have to hold? Can we just hold them until this is over and the market will go up? No, sir. If we have longs, go out of the longs, preserve your money, preserve your resource. Because this chart that we're seeing here, this is the 30-minute. We take it now live. The market failed to break into positive momentum below level 3. All the labels are going to change. We're going to get something like an A, all right, probably even down here, a B, and we're still going to get a very lengthy C to the downside. This is 5 swings. It could have ended up all of 4, but it didn't. So it is probably just a leg A, B, and C into B. We still get another C. We'll amend the labels when we go live. We're going to consolidate between a level 3 and 4. We're going to consolidate the shoulder level, so you don't want to be trapped into it. It's better after. Timing is important, and relating the asset classes together is very important. So relating the asset classes together, if you see one asset moving up, the other asset is going to be moving down. If it is not moving down, it's not really moving. So if one asset is going up, Tech 100 is going up, you don't want to buy gold. You don't want to be tied in the gold. You want to wait until the move is over in the US Tech 100 and then buy gold at whatever level it is. Look for a trigger and buy gold. All right. You also want to, if you have longs, you want to close them. They will be in a bit of little money because I perceive someone was able to take a trigger maybe on the 5-15 minutes, did the longs. They are not going higher. So just close them out because there's no point in wasting time, wasting resource, holding something that is not going to be moving higher. Even if at this point you're seeing bounce out of internal level 1. We don't perceive it is going higher. We're going to be seeing this. All right, let's do the labels and check momentum. Bear with us a moment. All right, we see an E, or we can see 5 swings complete. Just have to register 5. So we either have a 4A, 4B, and 4C, or we just have an A, and that B rejected the level 3. We're still getting a C. All right. It is possible that it will just linger and then move higher. Again, we don't want to be tied into the position so long as another asset class is moving higher. This is only a buy if you break out of level 3. This is level 3. We're still consolidating level 3. It's best, of course, that you break out of level 1, but at least you want to break out of the neckline. There appears to be here another internal level 3. There is a one-way gap to the downside. So even if there's a 1 and a 2, 3, all right, 4, 5 into 3 before you get a 4. So this is an internal 3 into 3. This is an internal 5 into 3, probably. So you want to take out internal 3 into 3. We failed. Moving average, we failed internal 3 into 3. We will take it out. On this bounce, I doubt. I believe this is a 5. We have 5 swings here. Something like an A, B, and a C. And let's see, can do this. No problem. And then move higher. Again, if we see good market in Tech 100, if we see strong market in the Tech 100. All right, so let's check now the momentum picture to see if there's any possibility of reversal that we are not aware of. We'll first check the smaller frames to see the flow of momentum. We're seeing negativity, of course, on the 5 minutes. Not volatile, but negative. And the same on the 3 minutes. Again, not volatile, but negative. Volatile, you need to see more price action. But you're seeing negative momentum. Take it now to check 10. Contained 15. We are still neutral at this point, but if you're seeing negative feeds, then more likelihood of move to the downside. We're just seeing negative feeds on the 5 on the 3. Take it now to 30. we have negativity, and we're just saying there is a trigger, of course. Trigger here is leg 4. Leg 4 here is rejection below an internal level 2, or leg 4 means you have a rejection probably somewhere related to an internal 2 here. So it's like there's a 1 and a 2 break down. If this breaks below oversold levels, you have a 3 to the downside. And there is an internal point of rejection somewhere here. But this can develop in a trigger very quickly. This can break down to the downside very quickly if you're seeing negative momentum on the 5 and 3 minutes. And we're seeing negative momentum on the 5 and 3 minutes. So don't be fooled by this small blue candle. If there's negative momentum on the 30 minutes and on the 45 minutes, it's more serious. And therefore, it's going to ease to the downside. The correction is not yet complete. Even if, again, you have a blue candle, and even if there's a bounce out of level 1, momentum will prevail. Continuation, negative momentum on the 1 hour. Now the feeds, remember, are negative, so we still get more to the downside. Only here it begins to become neutral. Doesn't mean there's going to be a bounce, but a bit of neutrality. Below 0 is still neutrality. Of course, on the 4 hours, we are going to be positive, and on the day, we are also going to be positive. All right, so we stand out. We wait for the US tech market to reach the target projection, and we're probably going to be doing longs and gold next week for that matter, because the current retraction